1535. Today we are going to talk about two cases. Case 1 is a client wants to investigate whether Amazon should be included in a climate fund and also want to ensure there were no other ESG-related reputational risks. And another client sought to determine whether Goldman Sachs should be included in a gender-focused ETF through the 4PH-based platform, which involves examining the relationship between gender diversity and firm performance. After two cases, we talk about AI solutions for sustainability analysis were continuously evolving. How could mortgage-based differentiate itself and build out a sustainable competitive advantage?
Hi everyone, in this section I will discuss whether Amazon should be included in an environmental fund from the perspective of potential investor. Through this analysis, I will evaluate Amazon's carbon reduction strategies and its financial alignment with low carbon investment goals and its long-term environmental commitments. In Exhibit 12, we observed that there is no significant correlation between the CO2 emissions per unit of sales across different sectors and the numbers of the stocks held by each investor. This highlights an important point. When assessing whether to include a company in an environmental fund, the decision should not be based solely on the industry type. Instead, it should be determined by the actual carbon emissions per unit of the sales of the individual company. In Exhibit 14, the MSCI ACWI Low Carbon Leaders Index is designed for investors seeking to reduce carbon emission risks while maintaining alignment with market benchmarks. For Amazon, its low carbon index performance is nearly identical to the parent index, indicating that low carbon investment strategies have not significantly altered the portfolio's financial performance. This demonstrates that investors can pursue sustainable development goals while maintaining market-level returns. Moreover, low-carbon companies like Amazon are not sacrificing profitability to achieve their carbon reduction goals. In recent years, Amazon has actively pursued carbon reduction strategies. For example, in Europe, it has rolled out electric delivery services using Rivian vehicles. Additionally, Amazon has begun requiring its supply chain partners to report greenhouse gas emissions. This initiative aims to achieve two key objectives: leveraging Amazon's scale to benefit companies committed to decarbonization, and providing tools and products to track and reduce emissions. These actions reflect Amazon's dedication to achieving its 2040 net zero carbon goal. Furthermore, Amazon has disclosed the challenges it faces in reducing emissions and the solutions in its financial statements, demonstrating its sense of cooperative responsibility to shareholders. To manage reputational risks, Amazon must showcase measurable ESG progress and actively engage with stakeholders to build trust. To conclude, Amazon's environmental initiative, financial performance, and commitment to sustainability make it a strong candidate for inclusion in an environmental fund. While its carbon intensity remains a factor to monitor, its proactive measures and transparency demonstrate its alignment with long-term ESG goals.
In Case 2, which focuses on Goldman Sachs and potential inclusion in a gender-focused ETF through the Portage Bay platform. While environmental considerations are critical for many ESG strategies, the focus of this case is a gender-focused ETF. Therefore, our priority lies in evaluating the social and governance dimensions, as they directly address gender diversity and inclusion. In leadership diversity, Goldman Sachs increased female representation in the partner class to 27%. This demonstrates the firm's commitment to gender inclusion at senior levels, which enhances workforce diversity and drives innovation. What's more, Goldman Sachs launched global women empowerment programs since 2008, supporting female entrepreneurs worldwide by providing training and funding. This initiative underscores Goldman Sachs' long-term commitment to enhance its social reputation, making it a strong candidate for inclusion in a gender-focused ETF. As seen in Exhibit 1, DEI is considered as a leading ESG consideration by a critical factor of 41% of institutional investors in decision-making processes, indicating that Goldman Sachs' effort in increasing gender diversity through programs and progress in leadership aligns with a significant ESG priority for investors, reinforcing their credibility as a candidate for gender-focused funds. Next, we'll focus on the government dimension, exploring how these initiatives are supported by robust policies and leadership accountability. Sushila Patel, the firm's asset management chairman, emphasizes that the diversity at a board level adds tangible value to shareholders, leading better decision-making and organizational performance. This proactive focus on diversity aligns with the ESG principles, positioning Goldman Sachs as a leader in social governance and enhancing shareholder trust. Moreover, Goldman Sachs implemented IPO broad diversity policy, refusing to take companies public unless they have at least one diverse board member, setting a strong precedent for corporate responsibility and accountability. As you can see from Exhibit 6, all three regions' professional investors plans to increase their allocation to ESG investment in 2023, with the highest growth intention in Greater China and notable levels in US and Europe. Exhibit 7 implicates that over 50% of surveyed investors believe ESG initiatives matter regardless of their impact on cash flow and risk. Additionally, many investors are willing to accept a 5 to 10% premium for investment with strong ESG alignment. Both graphs implicated their commitment enhances the firm's attractiveness, provides a strategic advantage to attract capital from investors' valuation within ESG funds. To summarize, Goldman Sachs has demonstrated strong alignment with the values of diversity, equality, and inclusion, which are integral to gender-focused ESG ETFs. Therefore, based on their demonstrations, Goldman Sachs is a deserving candidate for inclusion in the gender-focused ETF. Moving on to implementation plan to include Goldman Sachs in a gender-focused ETF. For the short term, within the next 3 months, we will focus on formalizing inclusion criteria. This means defining clear metrics to evaluate gender equity. We will also engage with key stakeholders such as investors and groups to align on expectations. Additionally, an immediate ESG metrics analysis will ensure Goldman Sachs meets the baseline for inclusion. Moving on to medium term, within a year, we'll aim to implement robust monitoring mechanisms to track progress. Strengthening reporting standards will enhance transparency, providing detailed insights into gender equity initiatives. Simultaneously, an outreach campaign will target investors to highlight the benefits of this inclusion, fostering broader support. Finally, in the long term, over 3 to 5 years, we will deepen commitments to gender equity. This includes expanding initiatives like leadership diversity programs and conducting period reviews to refine strategies and ensure sustained impact. This phased approach ensures structured, impactful integration of Goldman Sachs into gender-focused ETF while maintaining alignment with ESG principles, ensuring measurable impact, increased investor confidence, and alignment with ESG principles.
Now, in the path ahead, we would like to explore how Amazon and Goldman Sachs can differentiate themselves from their competitor. Both companies operate in highly competitive industry, like Amazon in e-commerce and Goldman Sachs in investment banking. Through innovative AI-driven solution and a strong focus on ESG goals, these companies aim to build sustainable advantage. Before diving deeper, it's crucial to understand who the competition is. For Amazon, company like Temu, which is a rising star in the e-commerce industry, focus on affordability and supply chain efficiency presents a unique challenge to Amazon dominance. For Goldman Sachs, competitions span multiple investment banks such as Morgan Stanley and Bank of America. These competitors are evaluated on 3 key aspects like business dominance, operational efficiency, and financial performance. Innovation must be grounded in market demand. Using the SDGs as the foundation, we identify key factors to differentiate Amazon and Goldman Sachs in the ESG ETF market. Amazon priorities climate-related goals to align with SDG 13, while Goldman incorporate gender equality to address SDG 5. This strategy ensures both companies meet the sustainable development goals of ESG ETF investment. Our goals are simple. First, to differentiate Amazon and Goldman Sachs in the respective industry. And second, to create long-term advantage through AI-driven innovation and transparency. This objective will allow both companies to better serve their customer. So first, customization. To customize ESG priority for different regions by allocating resources based on marginal benefit, we maximize ESG impact to create greater appeal to professional investors. Regional customization ensures that Amazon and Goldman remain aligned with both global and local needs. Transparency attracts non-professional investors by providing clear and accessible information. Transparency attracts non-professional investors by providing clear and accessible information. Unlike institutional investors, individuals often lack dedicated analysis. By presenting ESG data in the simple, transparent manner like flow chart we illustrate, both companies can attract retail investment and build trust. Amazon and Goldman hold unparalleled data advantage due to their vast customer base and resource. AI thrives on real-world data for training, and this company can leverage their data to optimize ESG solution and outpace competitor in delivering impact research. Summary of key advantage. To summarize, Amazon and Goldman differentiate themselves through transparency, AI-driven customization, and regional ESG priority. This strategy aligns with global ESG trends while addressing local needs. To looking forward, this company will continue innovating with AI, leveraging their data advantage to create scalable, impactful ESG solutions. Together, they aim to lead the market in sustainable development and investment. With this strategy, Amazon and Goldman Sachs are not just responding to the current market, they are shaping its future. Thank you for listening.